Hello and welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is from Vedanta Limited, Mr. Arun Misra, who is the Executive Director at Vedanta Limited, and Mr. Ajay Goel, who is the Group CFO for the company. Mr. Misra, let me start with your numbers. Revenue up 6% and your net profit up more than 54% at 5,000 odd crores. Take us through how the quarter has been from a global pricing environment point of view.
This quarter saw the metal prices firming up in the beginning of the quarter, and it reached quite a decent level in the middle of the quarter. Of course, towards the end of the quarter, it started normalizing again. And if you look at this quarter performance-wise, while the prices did help us, but we kept on our quarter-on-quarter cost reduction measures, which are very structural by design, and which saw a reduction in cost overall by about 17% for the same quarter of last year. And initiatives like backward integration of our aluminium production with Lanjigad expansion capacity of train 1 coming in line, own alumina production going up, own bauxite going up, own coal productions going up, has all helped to structurally reduce the cost of aluminium production. Similarly, in zinc, more and more domestic coal usage, landing of renewable power has helped the company to reduce the cost of production in a very structural manner. And so that in the coming months also or coming quarters, this initiative will keep on giving more and more reduction in cost. And so this is going to stay.
Mr. Goel, your margins up to nearly 28% from 19 odd percent. Is it completely a factor of pricing environment which was in conducive for this, or will you be able to maintain the same kind of margin for the entire full year?
Sure. Our margin for the quarter at Q1 this is at 34%. It is almost seen 1,000 basis point, 10% increase. So 24 same quarter last year going to 34 in the current fiscal. Now the margin at least half is led by a structural and hence sustainable cost reduction. So we do see our margins continuing in the same zone in near future as well.
And despite the fact that the prices may normalize in the next couple of quarters or months?
Correct. I mean, at the most, the Q1 pricing cycle can be called a mid-cycle. And we see maybe in the last couple of weeks, the dip is at the most is temporary. Given we have compressed cost structurally, our margins will hold in near future as well.
Mr. Misra, you had given a guidance of cost of production for aluminium and zinc. You are within that guidance for aluminium and zinc, and you're close by for the zinc guidance. Do you think for the full year you will be able to maintain that guidance of aluminium 1625 to 725 and zinc at $1,050 to $1,100?
No, absolutely. Based on the back of our very, very well-designed cost reduction measures, we are absolutely confident of delivering that. And as I said, the initiatives that we launched will come to full scale as we go by. Some things like in Hindustan Zinc, right now 8.5% of the energy is renewable power. So that percentage will increase to 30% by the end of the year. Similarly, currently coal consumption is at 45%, which is going to become more than 50% by the end of the year. So these kind of measures, which will have its own manifestations in a larger scale as the time goes by, we'll see further cost reduction. And if you recall, during analysts meet some time back, we did predict that our cost reduction measures will take aluminium cost down to about $1,500 per ton, zinc cost down to $1,000 per ton, and we are firmly in that direction.
And do you expect by the time you close the financial year, you will be able to bring the cost of aluminium to $1,500, because the guidance that you gave was $1,600 to $1,700?
Currently, by the end of the year, we will achieve our guidance, but structurally, we'll keep on going in that direction only.
Give us a sense of what's happening in the oil and gas division, especially because the volumes have been much lower than the guidance that you gave.
No, currently, of course, there's a decline, and always in an oil and gas business, this is not a new phenomenon. The properties do decline, and there is a decline management. Then the question comes how to make it up. So new technologies are being tried, which is alkaline surfactant polymer. It will be injected, and we will come back from 120 1,000 barrels of oil equivalent per day. Maybe it will increase by another 60,000 barrels per day. Similarly, we are looking at Northeast as a huge potential for us. Explorations has started, and it is expected. I'll not be able to comment on a timeline, but if the explorations are successful, at least 100,000 barrel of oil equivalent addition per day is feasible and looks probable in that zone itself. And there are, of course, other properties and other technologies to be tried, which will also increase. So we are in that direction, that first to come back to 300,000 number and then to work for 500,000 number.
And how much is the capex that you have assigned for oil and gas for the entire exploration and production part of it?
Right now, for this year, another $280 million, Ajay, if the number is correct, that we have assigned for it.
Correct. So the total capex guidance for the fiscal is about 1.8 billion, out of which 400 for the full fiscal is for oil and gas, and 280 is already committed. Mr. mentioned.
Okay. And can you also break down, Ajay, with respect to capex for other divisions as well?
Yeah, I mean, almost out of 1.9 billion, almost a billion is for our aluminum sector. Half is for Jharsuguda, our plant in Jharsuguda. Other half a billion is with the Balco. 400 remains is oil and gas. It's 1.4, and the remainder 0.4, 0.5 across businesses, be it electro steel, be it iron ore or zinc India.
Give me a sense of how your debt has been there, because on a net level, the debt has gone up on a year-to-year basis. What is the reason for that?
I think the one way to look at debt is our net debt to EBITDA ratio. And as on June 30th, net debt to EBITDA ratio, in fact, has improved from 1.9 last year to 1.54 as on June 30th. 1.54 ratio put in the perspective against the best names in the industry, metals and mining, Vedanta by far ranks number one. If I speak of overall group's plan, three critical target for the current fiscal: the delivery, deleveraging, and a demerger. And all three, we are on track absolutely.
Okay, so in the deleveraging part of it, what is the kind of target that you have set for FY25 for the Vedanta Limited alone, and how much of debt that you plan to bring down by? Because you had a debt of more than 61,000 crores on a net debt basis at the end of Q1. So by the end of FY25, what is the kind of debt levels that you're looking at?
You may have noted in July we raised 8.5 thousand crore rupees, 1 billion fresh equity using the QIP. The entire 1 billion will be used for deleveraging Vedanta Limited. In that respect, our debt will go by at least 1 billion in the current fiscal. I also like to underscore it will be refinancing the current high cost debt. And the billion deleveraging will also lead to more than 1,000 crores of saving in terms of interest cost.
So you're saying that your cash flows will increase by at least 1,000 crores only on the basis of deleveraging and low cost debt, basically, right?
That is correct. The QIP will be used for deleveraging. It lead to a 1,000 CR saving on interest cost, which again saves cash flow.
Can you give me a sense of what is the kind of a cost of capital as of now for you, and how much by how much will it come down to?
But right now, our cost of capital is about 10% on the group basis, and we want to bring it down to 9 or sub 9 by end of this fiscal.
Okay. Mr. Misra, give me a sense of the demerger process, because you've got approvals, but it's still now it's at the NCLT level. By when do you expect the entire demerger to come through?
So you would appreciate that for such a large and complex entity that Vedanta is, with so many different types of business, this is one of its kind of very fast tracking of demerger process from start to end. Whatever was in our hand, that process of getting all the NOCs and finally coming to the closure of filing with the NCLT, that has been done. Now the routine process of NCLT kicks in, and we expect by the end of this fiscal it should happen.
If you can give us a sense of, you spoke about the capex part of it. You also spoke about the deleveraging part of it. From the entire group's point of view of how do you look at shareholder rewards basically in the form of dividends? Will you be going slow this year with respect to shareholder rewarding, because the target is to deleverage and capex which you have already put in?
No, as far as focus of the management is concerned, it is for generating cash. Generating cash through volume optimization, through cost optimization will keep that effort up. Now, how to utilize the cash will be depending on many, many priorities, including spending for growth or for strategic interests. I'll leave it to the board and board to decide whether or not to declare dividend and when to declare dividend. It's for board to decide, and we would like to leave it at that.
Well, generating cash, I think Ajay is more looking at it, because Ajay, what is the kind of cash flow that you expect at the end for this financial year?
But in the current year, our guidance has been a bit of 6 billion, and that lead to 4 billion free cash flows pre-capex. And why we think pre-capex is important? Because the new capexes can be funded using the new debt. So it's a 4 billion free cash flow pre-capex.
Pre-capex, and you had a capex of nearly $2 billion. So then you're saying that $2 billion will be available if required to give away as dividends going forward, is it?
That's correct. That's correct.
Mr. Misra, give me a sense of what you make out of that Supreme Court judgment on, especially on the royalty part of it, because we are talking after a long time. Give me a sense, of what you make out, and what is the kind of impact that could have, that you could have as a result of that.
The Supreme Court judgment has to be seen from two angles. One, of course, royalty is not the tax, and also it says that the state can impose cess or tax on mining assets, depending upon the state legislature's wisdom. So, as far as our entities are concerned, of that, the majority say Hindustan Zinc in Rajasthan, the past land tax issues all have been resolved, so there is no pending matters there or some liability there that has to be addressed. Then the question comes, any new tax that the state government imposes, now whether that will be retrospective or prospective, that's a matter for Supreme Court to decide. If the new tax comes, we will see. I think yesterday Jharkhand government has announced tax on steel and coal and other minerals, ranging from 100% to some 20%, 30% tax on per ton basis. So this is a new phenomenon. We'll see. I'm sure the both state and central government will ensure viability of all organizations engaged in the economic activity, especially company like Vedanta with kind of minerals in its arsenal is totally working for the development of the nation. I'm sure the wisdom will prevail that allow wealth creation in this field and allow the company to explore more metal and bring it onto surface for country's development.
Um, Given the fact that the judgment very clearly says that the state government has the right to impose a cess or a tax, there, do you see most states picking up this tax because it's an additional revenue for them?
It's a question of, I think, fiscal prudence between state and center. If the alternatively, through the royalty, there's a mineral development fund, through the normal GST route. So if the overall tax collection, you see, if the more the economic activity, more would be the tax collection and more will be the devolution of tax from center to state. So we'll have to look at that, how it pans out.
My question was also from a point of view of the impact that the industry could have on a larger scale, because I remember when Kane also had this issue of cess being imposed on them, and there was a lot of back and forth which was being done. So is there going to be any kind of impact on any of the divisions of yours as of now? You spoke about Hindustan Zinc, but what about other divisions?
So looking at our portfolio, the kind of metals, kind of minerals that we handle, which are lower volume, high priced niche segment kind of minerals. The trend that I see is looking from Jharkhand government, the kind of taxes are straightway on per ton basis. Most affected would be the big mines like coal, iron ore and all that, which are lower priced but higher volume. So they would be impacted more. In our case, of course, there will be impact will be there. But compared to us, I think the big coal mines or the iron ore mines, they would face the hit much bigger than us.
Sir, give me a sense of how do you see pricing moving from here? You gave me a broad sense of what you see the trend like, but for the entire, if I ask you, given the kind of geopolitical crisis which is there are a lot of stuff which is happening. Do you see pricing to remain firm going into through the financial year?
See, anyone in business is always very optimistic of prices in future, while when the reality strikes, they have got all the explanations why the prices were not up. We are no different from that. So while currently the prices are down, my firm belief, see, this is a unique year in the history of the world when we had 64 elections across the globe. And the big elections in UK, France are over. Next bigger election is in US in November. So once we are through this quarter, I'm sure we will see by third quarter a lot of infrastructure push in the economies for their urgency to increase the GDP growth both in Europe as well as US. India is consistently pumping in money on the infrastructure sector, even with the current budget declaring about more than 11 lakh crores dedicated for various kinds of infrastructural work. And I think this push will see its rise in prices again in the fourth quarter of this year. So I expect the current levels to remain stable till about December, and post that there will be increase in prices.
Ajay, on a consolidated level, the EBITDA margin, you said that you hope to retain this kind of thing, but how optimistic you are given the fact that there are some headwinds with respect to, if there is an additional tax that can come in across the board for various of your operations, or for that matter, the pricing takes takes a weaker turn, much anticipated ahead of what Mr. Misra is talking about. How are you placed to manage your EBITDA margins at that point in time?
Very optimistic, I must say. If you look at the current quarter, more than half the gain in terms of the margin is coming through a cost measures which are sustainable and structural. Given Vedanta's large portfolio, we do have in fact also internal hedge across the businesses. Significant part of the cost reduction in aluminum sector via integration of value chain is on the offing. The green power, one more area. So we got in fact multiple options. Our repertoire of options is quite large, and I do see that we hold the margins in near future irrespective of the pricing cycle.
Mr. Misra, since you are here, can you also give us an update on the demerger plan that you had for Hindustan Zinc? How are we looking at it now? Because you will at some point in time be looking at three-way, but now is it? Are you proceeding with some kind of demerger at Hindustan Zinc?
No, absolutely. We are all both the entities who are shareholders of Hindustan Zinc are actively working on it. There are continuous dialogue going on between the two entities, and we firmly believe as a management that the demerger will bring in focus as far as improvement in or increase in capacities of the two units are concerned. Also, will give a huge choice to the shareholders to invest in the company or the sector that they specialize in. So while we'll have, that should see the market cap going up. Of course, for various actions, currently Hindustan Zinc market cap has grown from little over 16 billion a year back to now currently 30 billion plus. And I'm sure this kind of demerger into silver and zinc lead being a separate business, and also bringing in recycling company, which will be one of its kind, not only in India, and entire of this part of Southeast Asia, will surely add another 5 to 10 billion dollars to the market cap.
How are you managing the feedback which is coming from your largest stakeholder, which is the government?
No, it's not a question of managing the feedback. It's of mutually clearing to each other what were the plans, how do we see the world, what are the implementation issues, whether it should not happen that both of us agree, then down the line while implementing they face a regulatory roadblock or something else. So we are clearing issue by issue, and I'm sure very soon we should be able to, if everything goes well, it should see the light of the day.
Is there a timeline for that? By when you plan to make it concretize the entire issue?
Since both of us are, very actively discussing, and we would not be pressurizing ourselves by going on a timeline, so to say.
Mr. Misra and Mr. Goel, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you. Thank you. Thank you so much.